So in our last class, we were able to look at candlestick anatomy, and we were able to point out that there are two types of candles. We said we have bullish candle, and we said we have bearish candle. We went as far as letting us understand that whatever is happening on the market is as a result of the battle between buyers and seller. Now the sellers are what we refer to as the bear, and the buyers are what we refer to as the bull. Then we refer to a candle that is a buying candle as a bullish candle, and that of a selling candle as a bearish candle. So one of those things I pointed out while making those explanation is when we have these candles, when the candle is like two or three joined together, they form what we call candlestick pattern. And during the examples that I was given, I was able to point out some candlestick patterns like the bullish engulfing candle for a bullish candle, the bearish engulfing candle, the likes of morning star and evening star, and so on and so forth. And then I also said that when these candles are in hundreds, thousands, and millions, when they combine in thousands and millions, they give birth to what we call market structure. So we are going to look at market structure today, and the market structure we are looking at is classified into basic market structure and advanced market structure. Before now, I've sent a video to you guys to watch on basic market structure, where we're able to see, for those of you that have watched the video, which I believe you guys should be serious enough to have gone through those videos, where we're able to look at the characteristic of a bullish market as a market that is creating series of higher highs, higher low, higher highs, higher low, higher high. And then such a market should give us, a continuous break of structure to the upward direction like this, like this. So this is a break of structure, this is a break of structure. So these are the two characteristics of a bullish market. The market will be creating higher highs and higher low, higher highs and higher low. And if you have continuous break of structure towards the upward direction. So as such, we said this particular market is a bullish market because it's trending towards the upward direction. Bullish market. But in a situation whereby we have a market that is creating, that came from a high to a low, to a lower high, to a lower low, to a lower high, to a lower low, we say that, and we are able to identify a continuous break of structure to the downward direction. We say that such a market is known as a bearish market. So if you have watched this video, this is more like a recap. This thing I'm saying right now should not be a problem to you. So this is what a bearish market, because it is trending towards the downward direction. So I believe this is taken. So this is one of those things we look at under basic market structure. We also went further to look at impulsive move and corrective move, which we say that impulsive move are those moves that causes break of structure to the upward direction like this. In a bullish market, we say that impulsive move is this move that we have because it breaks structure to the upside. We have another impulsive move that breaks structure to the upside. Then these are all corrective move. And with the understanding of impulsive and corrective move, we're able to look at the law of price action. So please, if you have not watched that video, and if what I am saying right now is looking strange to you, ensure you go and watch the video. I've sent it to you guys already. Ensure you go and watch that video. So it brings us to the law of price action that states that for every impulsive move in the market, there is a corresponding corrective move. For every impulsive move, there is a corresponding corrective move. So, and for a bearish market, these are the impulsive move. This move, this move, and this move. And these are the corrective move. This move, this move. Yes. So for the law of price action, it says that for every impulsive move, there is a corresponding corrective move. Impulsive move, corrective move. Impulsive move, then the next expectation is what? Is a corrective move. Now, you have seen what a break of structure looks like. So today, we'll be more interested in the advanced market structure. Now, the advanced market structure, what makes it advanced is the presence of liquidity. Because what you've learned from basic market structure is, you said if a market is bullish, market have to be creating higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low, higher high, and then if market want to switch, we will need what we call a change of character, and the market will start creating lower lows and lower high, lower high, lower low, lower high, lower low, in that order. This is what we learn from the basic market um, structure. But the market does not move like that. Market does not move like that. Market don't just start moving from a low to a high to a higher low like that. No, there is always liquidity that is created in the market. That is why when you look at these things and you go to the real market, you will be confused of what you're going to see. So this is how the complex market So this is how the complex market structure looks like. The market will come from, if you are having a bullish market in the complex scenario, you have a low to a high, right? Market will create a potential higher low, which will be termed as liquidity. It will give us a break of structure, come back to take out the liquidity, give us another break of structure, create another liquidity that will be taken, give us a break of structure, come back to take out that liquidity, a break of structure, in that order. Now, when you look at this looks a bit more complex than the initial drawing that you're seeing here. This is very, very clean. This is a textbook schematic. That is why it's looking very beautiful. But in this case, this is more like the real market condition. This is how you will always look at the chart. This is what you're going to experience in the real world. That is to tell you that market does not just continue to move in a straight line. There is always some sort of consolidation, which could be in form of liquidity and all. So these are just how the complex market scenario looks like. Now, to understand this complex market scenario, we need to understand some basic concepts. So, but before I dive into that, I need to show you how um, a bearish market looks like in the complex scenario. So the market will come from a high point as usual, and there will be a potential lower high and a break of structure, which could be our lower low. The market will have to go back to do what? Take out a liquidity, give us a new break of structure, create another potential lower high, give us a break of structure again, and take out that liquidity, and it will continue in that order. It will continue in that order. There will always be a sweep of liquidity at the end of the day. So this is how a bearish market looks like in a complex scenario. So I believe you guys are taking note of what I am saying and you are following. If you have a question, you can drop it in the comment box or call my attention. So for us to understand this this complex market or advanced market structure properly, I want to look at some concepts to help us, have better understanding. And what is this concept? I want to look at the concept of swing structure. Swing structure. I want to look at the concept of swing structure. Now, a swing structure a swing structure we can have what we call a bullish swing structure, bullish swing structure, and also we'll have bearish swing structure. So a bullish swing structure starts like this. There is a sweep of a previous low, a sweep of a previous low, and a break of structure. This is what I mean by a previous low. This was a previous low. Price took it out, and price went up to give us what? A break of structure in the opposite direction. So this is a bullish swing structure. Price took out a previous low and gave us a break of structure in the opposite direction. Now this is how a bearish swing structure looks like. Now price took out a previous high, which is this high here, and give us what? A break of structure in the opposite direction. So this is a bearish swing structure and this is a bullish swing structure. So most of the time, market bullish complex market, a bullish complex market situation or scenario always start with what? A bullish swing structure like this. And then the next thing you will see is that price will give us, that potential retracement, which could be a liquidity that will be taken later in the day, which will produce a break of structure, come back to take out this liquidity and give us another break of structure. Now, when you look at this again, it's as if we are having the same bullish swing structure. You see a sweep of a previous low and what? A break of structure. Now, the same situation will happen again if this market will continue. Price will pull back, give us a break of structure, come back to take out that thing and continue in the upward direction. Now, the problem most of the time is a lot of beginners don't understand how this market works. So most of the time, they are making trade entry from here. They are entry from here, probably because they call it support level or double top or whatever reason they are seeing. So they are making trade entry from here. And yes, when they enter from here, market will go in their favor, but it's a trap. At the end of the day, they are very happy that, oh, we are in profit, we are in blues. But what happened? After some time, market will retrace to clear their stop loss because if they are entering from here, their stop loss obviously is going to be around here. And now this pullback here would have taken them out. And those that understand the advanced market structure, they will be making entry from this area. They will be making entry from this area. They'll be making entry from this area. Now, if you enter from here, yes, there were retracement, but what happened? The market did not take you out. Now, if you enter from, if you want to make a re-entry, if you enter from this level, obviously this move here would have taken you out again. This particular pullback that happens here would have taken you out again. And those who understand the advanced scenario, they will be waiting to take their trade from this level and they will always be in profit. Whoever entered from here is in profit, but whoever entered from here has taken a loss. Whoever entered from here has taken a loss. Whoever is entering from here will be in profit. So this is how the advanced market scenario works. Your take from this explanation is, first, if you want to know if you are in a bullish market scenario, look out for bullish swing structure. Bullish swing structure is what will help you because most of the time a bullish complex market structure is made up of multiple bullish swing structures. I believe you guys get this explanation. And so just like I explained, the same thing happens here. This is a bullish market, a bearish swing structure. Now, if this market want to continue in a downward direction, what happen is that we'll still have another retracement to give us a break. Price will come back, take out this liquidity, give us another break, give a retracement again, another break, take out the liquidity and another break again. Now, if you see that if this market is bearish, you will always be able to identify a lot of bearish swing structure. Now, this is the first bearish swing structure that we have. Remember, this swing structure is between this low and this high, this low and this high, this low and this high, this low and this high. Now, the first bearish swing structure we have is between this low and this, this high and this low. Now, the next one is this high and this low. The last one is this high and this low. But you will always see that there is a sweep. This is what we call sweep of liquidity. It was a previous high, market took it out, which could be a stop loss hunt. Market took it out, and then what happened immediately? A break of structure to the downside. Now, between here and here, we have a swing structure, bearish swing structure. Another swing structure was spotted here, a sweep of a previous high and a break of structure, a break of structure. So I believe you guys understood everything that I've said here. I believe you understand how to identify a bullish market condition from a bearish market condition, and how to, pay more attention to the complex market condition, or the advanced market structure rather. This is what we call the advanced market structure. This explanation that I just gave you here. So that is pretty much about advanced market structure.